It's Thursday, January 30th, and this is your stock market daily news podcast, breaking down yesterday's market moves and the headlines investors need to know. After a turbulent trading session, the major indexes ended slightly in the red. The S&P 500 slipped 0.3%, the Dow ticked down by about 100 points, and the Nasdaq closed off just over 0.4%. The big story on Wall Street? Renewed worries about the AI bubble and a rare warning signal flashing from the gold market that hasn't been seen in over 2 decades. Let's get into what moved the markets and how it could shape your playbook. First up, a tech warning shot. Microsoft, long seen as the poster child for the AI boom, fell more than 6% yesterday despite beating Wall Street earnings expectations. Why? Investors are growing nervous about the company's massive spending on artificial intelligence. Microsoft burned through over $57 billion in new investments in just 6 months, nearly doubling last year's outlays. University of Michigan professor Eric Gordon called this a taste of the crash to come, warning that the AI sector's sky-high valuations are starting to look like a bubble. If you're holding big AI winners like Nvidia or Palantir, now both trading at jaw-dropping multiples, be prepared for volatility ahead. Meanwhile, gold is making headlines for a very different reason. Stifel strategists flagged a major bearish signal. The S&P 500's price, relative to gold, just dropped below its 7-year moving average, a crossover that hasn't happened since 2002, right before the dot-com bubble popped. Gold has surged more than 20% so far this year, while stocks have barely budged. In the past, this breakdown between stocks and gold has preceded challenging years for equities, so investors are keeping a close eye on safe havens and perhaps trimming riskier positions. It's not just gold benefiting from global anxiety. Oil rallied another 12% this month. West Texas Intermediate crude broke above $64 a barrel, the highest in over 4 months. Rising oil prices often feed straight into higher inflation, which could force the Federal Reserve to keep interest rates higher for longer. For equities, and especially growth names and even Bitcoin, that means a tougher backdrop and less hope for easy monetary policy in the near term. Let's shift to the regulatory front. The SEC dropped new guidance yesterday, putting third-party tokenized stocks, those crypto-based assets tracking company shares, but not actually giving real ownership, firmly under securities and derivatives rules. This move tightens oversight on synthetic equity products, a fast-growing area for retail traders. True tokenized stocks, according to the SEC, need to be issued or authorized by the actual company to represent real equity. For investors experimenting with blockchain-linked shares, be on alert for tighter compliance and more scrutiny ahead. Finally, swinging over to India, the rupee fell again, closing at a new all-time low of 91.99 against the US dollar. Mounting geopolitical jitters and strong month-end demand for dollars drove the drop. The weak rupee spells higher import costs and can add to inflation pressures, putting the Reserve Bank of India and local markets on watch as budget season approaches. Let's recap. The S&P 500 finished at 4,480, the Dow closed near 36,100, and the Nasdaq settled at nearly 16,000. Key themes this week? Investors grappling with sky-high AI bets, defensive moves into gold and oil, and fresh regulatory and currency risks on the global front. Looking ahead, eyes will be on tech megacaps earnings, the Fed's next meeting, and whether inflation keeps rising. That's a wrap for today's Stock Market Daily News podcast. Don't forget to subscribe, check out our website for deeper analysis, and follow us for timely updates every trading day. Thanks for listening, and we'll see you tomorrow.